Hello everyone and welcome to the SBI Securities Weekly Wrap podcast. So first, let's discuss how the markets have been in the week gone by. FY24 ended on a positive note with key benchmark indices like Nifty 50, Sensex, Nifty Midcap 100 and Nifty Small Cap 250 delivering stellar returns of 31.7%, 27.8%, 63.9% and 75.5% YOY respectively. All the sectoral indices ended the year on a positive note and key outperforming indices were Nifty Realty up 142% YOY, Nifty PSE up 108% YOY, Nifty CPSE up 103% YOY, Nifty PSU Bank up 96% YOY, Nifty Auto up 80% YOY, Nifty Energy up 74% YOY, Nifty Pharma up 60% YOY and Nifty Metal up 55% YOY. Bottom three sectoral indices were Nifty FMCG up 20% YOY, Bank Nifty up 19% YOY and Nifty Media up 9% YOY. In terms of fund flow, during FY24, both FIIs and DIIs have pumped rupees 2081 billion and rupees 2067 billion till 27th March 24 on net basis respectively. FY25 is likely to be an event packed year with India going into election mode from 19th April 24, Union budget for FY25 in July 24 by the newly elected government, likely rate cut from US Fed beginning June 24, US elections in November 24, etc. Aspects to look out during the next week are: going into next week, market participants will keenly track auto sales number for the month of March 24, followed by RBI policy from 3rd April to 5th April 24. Moreover, earnings season for 4Q FY24 will kickstart from second week of April 24 and Street is likely to react to the election manifesto of the ruling and opposition parties. For the next 2 to 3 months, investors are recommended to stick to quality businesses with strong earnings growth potential and refrain from getting swayed by the euphoria in small and micro caps as volatility is likely to persist led by outcome of multiple big events. Talking about the weekly sectoral gainers and losers on BSE. Except for BSE IT, all other sectoral indices ended on a positive note. The BSE cap goods, realty, power, consumer durable, auto, oil, healthcare, PSU, metal, BankX and FMCG were the biggest sectoral gainers with weekly gains of 3.8%, 2.9%, 2.5%, 2.5%, 1.8%, 1.8%, 1.6%, 1.6%, 1.3%, 0.8% and 0.1%. While IT was the only sectoral loser with weekly loss of 0.5%. Talking about the weekly Nifty 50 gainers and losers. The top gainers in Nifty 50 during the week were Bajaj Finance, Adani Ports, Larsen & Toubro, Bajaj Finserv and NTPC. While top Nifty 50 losers were Tata Consumer, Wipro, LTI Mindtree, Tech Mahindra and HCL Technologies. Taking a check on some key monitorable. For the week, FI's net sold rupees 3,172.3 crores, while DI's net bought rupees 8,193.5 crores respectively. Brent crude largely remained stable at $86.4 per barrel during the week. US 10-year bond yield remained flat at 4.2% week on week. Coming on to corporate developments, where we'll be discussing on companies which were in focus during the week. So the first one is Adani Enterprises. So the company's subsidiary, Kutch Copper, commissioned the first unit of its greenfield copper refinery project at Mundra, Gujarat. So positive for Adani Enterprises in long term. Larsen & Toubro, the company's building and factory business vertical division, won multiple orders in the domestic and international markets valued between rupees 2,000 to 5,000 crore. The company's subsidiary L&T Geostructure also bagged multiple orders across India valued between rupees 1,000 to 2,500 crores. Therefore positive for L&T in long term. Third, Bharat Heavy Electricals Limited, BHEL, The company received an order worth rupees 4,000 crore from Adani Power for 1,600 megawatt thermal power plant project in Chhattisgarh. So positive for BHAL in long term. Varun Beverages. The company completed the acquisition of South African beverage company Bevco along with its subsidiaries. The company also issued a corporate guarantee amounting to rupees 660 crores to secure credit facilities extended to Bevco. So positive for Varun Beverages in long term. Adani Green Energy. The company commissioned a 180 megawatt solar power plant in Rajasthan. The plant has a 25-year power purchase agreement with the Solar Energy Corporation of India. Therefore, positive for Adani Green Energy in medium to long term. HPCL. The company tied up with Tata Passenger Electric Mobility to set up 5,000 public charging stations across the country. Therefore, positive for HPCL in long term. Kalpataru Projects International. So the company's transmission and distribution T&D business in overseas market and its urban infrastructure business vertical bagged orders worth rupees 2,071 crores. Therefore positive for Kalpataru Projects International Limited in long term. Dr. Reddy's Laboratory. The company entered into an exclusive partnership agreement to promote and distribute Sanofi Healthcare India's vaccine across the country. So positive for Dr. Reddy's Lab in long term. Cipla. The company announced an exclusive distribution and marketing partnership for the sale and promotion of Sanofi India's CNS Central Nervous System product line. As a part of the collaboration, Cipla will handle the distribution of Sanofi's India's 6 CNS brands. So therefore positive for Cipla in long term. Adani Power. The company received approval from the Competition Commission of India (CCI) for the proposed acquisition of 100% equity share capital of Lanco Amarkantak Power Limited. Therefore positive for Adani Power in long term. Shyam Metallics and Energy. The company's JV obtained a letter of intent for the grant of a composite license for the Surjagad 1 iron ore block on an area of 1,526 hectares in Maharashtra. Therefore positive for Shyam Metallics and Energy in long term. Pratap Snacks. The company started commercial production at its new unit in Jammu and Kashmir for various namkeen snacks with a capacity of 10,000 metric tons per annum. Therefore positive for Pratap Snacks in medium to long term. Now moving on to the pick of the day. So this is one of our product where we have given a buy call on Securities Technologies at a CMP of rupees 1,250 with a price target of rupees 1,375. So Securities Technologies Limited, it is a leading player in software testing in India and amongst the largest software testing company in the world. The company is making a monumental pivot from being a pure play software testing and quality engineering service company to a full cycle digital assurance and digital engineering service company. Talking about its key growth drivers, so the management is targeting to be a $1 billion revenue company by 2027 using both organic and inorganic route from the current rupees 1,800 crores of TTM revenue. This translates into a CAGR growth of 46% over the next 4 years. The second key growth driver is that in its digital assurance, the testing service market has always been huge, which is 4x bigger than the testing product market. It is estimated to be at more than $23 billion, up from $21 billion in 2019. The market is even bigger if we include the addressable testing market. Talking about its valuation, at current price, the stock is trading at 18.4 times of its TTM December 23 earnings. Now moving on to our next product, which is pick of the week, where we have given a buy call on Titagar Wagons at a CMP of rupees 896 with a price target of rupees 1030.4. So Titagar Rail System, it is a supplier of passenger rolling stock including metro coaches. The company's product range includes electric propulsion equipment such as traction motors and vehicle control systems. It also designs and manufactures wagons such as container flats, grain hoppers, cement wagons, clinker wagons and tank wagons. Its business is divided into 4 divisions: railway freight, railway transit, engineering and shipbuilding. Talking about its key growth drivers, where it has that the order book as on December 23 stood at rupees 27,466 crores. And the breakup is as follow, where freight rolling stock has an order book of 13,650 crores, constituting 50% of the order book, and its passenger rolling stock has an order book of 13,816 crores, which also comprises 50% of the order book. In its freight rolling stock, the company has registered industry's highest ever monthly production of 1021 wagons in December 23, and it has guided to maintain the current run rate in FY25 with an EBITDA margin to sustain around 10 to 11%. Talking about its another segment, passenger rolling stock, presently the company produces around 3 to 4 coaches per month, and it expects the same to increase to 15 to 20 coaches per month by 3Q FY25. Additionally, the company targets to hit a run rate of 72 coaches per month over the next 3 to 4 years. Talking about its valuation, at CMP, the stock is trading at 38.8 times and 31.6 times of its FY24 FY25 PE based on Bloomberg consensus estimates. Coming on to the corporate actions for next week. So for key corporate actions in next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. So this was all about the weekly market podcast. Thank you for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.